Hello, hello. Get started shortly. Hey, good evening. Good evening. Hello, hello. How y'all doing this evening? Hey guys, we'll get started shortly. I give it a few more minutes. Hello, hello. We'll get started in a minute. In about 2 minutes, we'll get started at 8:15. Hello, welcome in. Welcome in. How is gold? I'm not sure. Uh, you need to start sleeping. I just woke up from a nap. I get like little naps throughout the day. I'm not sure about gold just yet. We'll look at it after we do our beginner course. Can you hear me? It might just be my voice because, like I said, I just woke up. I sound echoey. Oh, the echo thing was up. Is that better? Do I still sound echoey? I sound like I'm in a hallway. Hello? Hello, 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 hello. All right, this sound better? Okay. We ain't even started yet. TikTok trying to act crazy. That was good when I turned the echo down. Okay. You're having a rough week? Joe, can you bring me a bottle of water, please? Well, it's just Tuesday. I pray it gets better for you tomorrow. Yeah, there's water in there. Gold is a little crazy. I only trade it if it like aligns for real. But we go over it. Trading week starting off a little slow. Waiting on an entry. All right, guys, we're about to get started. All right, it's 8:17. I am Sierra the Wealth Empress, your credit, day trading, and funding strategist. And today we are on day four of our beginner's course and going over the Candlestick Trading Bible. Yesterday we left off on trend lines. Okay, and if you missed yesterday's class, it is not on YouTube yet. It takes these videos forever to download. So hopefully to be done downloading today, and then I'll upload it sometime tonight because I will be up. All right. So we're going to start right here on page 62, where we ended off at with our trend lines. Why did I color my hair? This is some hair. It's crochet. Okay. All right. When the market moves this way, trend lines help us to anticipate the next impulsive move with the direction of the market. Look at another example of an uptrend. Okay, so they're talking about trend lines and how we mark up our trend lines. I'm going to go to a blank chart. Okay, here we go. We got a trend line right here. Okay, so a trend line is just two rejection areas. So it has to be two rejection areas for it to be valid. Okay, so as you see, I started my trend line here, right? And then price pushed up. It came down, touched it again, price pushed up, touched it again, price pushed up. This trend line, price touched it several times and then continued to push up. So we don't have a trend line break just yet. And then it would be the same with a downtrend. All right, so we got two rejection points here, and we can add a trend line here. All right, and this was a break and retest, and as you can see, price hugged the trend line on the retest a couple of times also. Did price touch the line or did I just draw the line where it touched? That's a good one. All right, so I like to use my magnet tool for everything. First two rejection points and then just extend it out and it'll show you. So it says, as you can see, the market respects the trend line, and by drawing it the right way, we can easily predict the next movement upward. This is all what we can say about trending markets. I think it's clear and simple now. What I want you to do is open your charts and try finding trending markets. All right, so we did that yesterday. All right, ranging markets are pretty straightforward. They are often called sideways markets because their neutral nature makes them appear to drift to the right horizontally. When the market makes a series of higher highs and higher lows, we can say that that market is trending. But when it stops making these consecutive peaks, we say that the market is ranging. And a lot of times you'll hear consolidation, okay? A ranging market moves in a horizontal form where buyers and sellers just keep knocking price back and forth between the support and resistance level. All right. So this is the sideways movement. This is what consolidation looks like. And sorry, we had a pair. Okay, here we go. Right here. This will be consolidation, right? Although we had these lower areas here and price did spike down here, right? These candles closed back up in the consolidation range, okay? I do. As a matter of fact, Sienna, 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 ginseng packet, a ginseng packet. One of those red packets. Yeah. Okay. So this is consolidation, okay? The chart above shows a ranging market. As you can see, the price is bouncing between horizontal support and resistance levels. The difference between trending markets and ranging markets is that trending markets tend to move by forming a pattern of higher highs and higher lows in case of an uptrend, and a higher low and lower low in case of a downtrend. Okay, and this right here you can consider an uptrend in that area. All right, and then this right here is a downtrend. When it starts to look like this is trending markets. Okay. One-on-ones, the link is in the bio for one-on-ones. All right, so, but ranging markets tend to move horizontally between key support and resistance levels. Your understanding of the difference between both markets will help you better use the right price action strategies in the right market conditions. Trading ranging markets is completely different from trading trending markets because when the market is ranging, it creates equilibrium. Buyers are equal to sellers, and no one is in control. This will generally continue until the range structures broke out and the trending conditions start to organize. The best buying and selling opportunities occur at key support and resistance levels. And sometimes you'll see these ranging markets, they'll range sideways also. So we had one on NAS recently. Let's come over here. Okay. So this was a couple weeks ago, right? No, a ginseng packet. The one that I had you give me earlier is in the cabinet next to the refrigerator. All right. So sometimes you'll see the ranging recently for what? Sometimes you'll see a ranging market sideways also, right? Where prices just moving back and forth between these 2 points, okay? And then eventually you'll get a breakout. All right. So this is why you have to be careful about break and retest trades because you don't want to end up on the false side of a breakout, okay? And then sometimes you'll see a ranging market inside of a wedge. It'd be a wedge pattern. Let's see if we can find one of those. Thank you. All right, so consolidation and then our breakout, our impulsive move. I'm sorry, you said recently on what? No, that's not Bitcoin. Okay. All right. So sometimes you'll have like a wedge pattern. This is called a wedge pattern. This is a bullish flag. So you see you have a flagpole and then price created the flag and then price pushed out. So in this case, when you see consolidation like this, I wouldn't necessarily trade this range, right? Although it's 35 pips, but that 35 pips really, so I wouldn't try to attempt to trade every consolidation range. No, it was recently. It was the week before last. That's why I knew it was there because I traded it. This is April the 29th. That was recent. Alrighty. So, trading range in markets is completely different from trading trending markets because when the market is ranging, it creates equilibrium. Buyers are equal to sellers, and there's no one in control. This will generally continue until the range structure breaks out and a trending condition starts to organize. I don't understand what you're saying. It's not offensive as you as a person. I don't understand what you're saying. The best buying and selling opportunities occur at a key support and resistance level. Okay, and they're just talking about uh, the high and the low of the level as far as support and resistance. That's the only time where I'll acknowledge support and resistance as far as in consolidation or inside of a wedge. Okay. There are three ways to trade ranging markets. I'm not going to go into details because I want you to get here is the skill to look at your charts and decide whether the market is trending or ranging. In the next chapters, I will go into details and I will give the trading tactics and strategies that you will use to trade trending or ranging markets. If you can't differentiate between ranging markets and trending markets, you will not know how to use these price action strategies. The first way to trade ranging markets is by waiting for price to approach support or resistance levels. Then you can buy at key support level and sell at key resistance levels. Oh, okay. All right, so let's look at EU. Okay. I am going to scroll over a section and I want you to tell me if it is ranging or trending, and if it's trending, is it an uptrend or a downtrend? Okay. So this area right here, what is this? What is it? Okay, okay. So we're going over if the market is ranging as far as consolidating, or is the market trending? And if the market is trending, tell me what trend it is in. So in this area right here, is the market ranging or trending? Trending. Yes. Is it in an uptrend or a downtrend? Upwards. Yes. Good job. All right. Here, what are we doing? Joe, bring me the Windex. Downtrend. Yes. Yes. Here. Right here. What are we doing here? Thank you. I'm freezing bad. I'm sorry, guys. Hopefully, one day soon we can get back on Streamlabs and off of TikTok Studio. What are we doing in this area? Ranging. Okay, we're ranging here. And this is actually like a perfect example of what they said, right? So we're ranging here, and then price is pushing up towards the upside, okay? So what I was taught about consolidation is price building orders and then it's price reversing, okay? So here, price was going in a downtrend, right? It's still in a downtrend right here because this is equal lower highs, okay? And then it moved sideways, then it continued down, then we moved sideways, and then the direction changed, okay? So consolidation happens when price is contemplating direction, okay? And then after consolidation, you'll want a explosive move for price to show you what direction it's going into, okay? All right. All right, and they're showing you where to buy and where to sell in a range of market. This is why I said, thank you. This is why I said it's the only place that I support and resistance is in a consolidating market. Okay. And you'll want to wait on your candlestick patterns to show you when to buy off of the zones. Okay. And so right here it says buy here, and we have a morning star candlestick pattern, which is our bearish candle, our doji, and our bullish candle. Okay. And then over here, we have our harami, these two right here. And then over here, we have our pin bar. This is just an example in the book. They just took a screenshot. Okay. All right. So it says, as you can see, the market is moving. No symbol. This is in the book. It's just an example from the book right here. All right. So as you can see, the market is moving horizontally. In this case, the best buying opportunities occur at support level, and the best selling opportunities occur at the resistance level. The second way of trading range in markets is by waiting for the breakout from either the support level or the resistance level. When the market is ranging, no one knows what is going to happen. We don't know who is going to be in control of the market. This is why you have to pay attention to the boundaries. But when one of the players decides to take control of the market, we will see a breakout of the support or resistance level. The breakout means that the ranging period is over and the beginning of a new trend will take place. Okay, so we can come back over here to EU, right? And we can mark this area. Okay, and this gave us our impulsive move. This gave us our displacement to let us know where price was going. When do you know when the breakout is? Okay. Yep, that's what we're going over right now. So this is on the 4-hour, but it'll look like this on every time frame, okay? So the breakout will happen when price actually comes lower than your two areas that created the range, okay? 9 times out of 10, you'll get a fair value gap, okay? Which is right here, okay? So this is displacement. Price gave us a heavy move to the downside and it closed outside of the range. And then price came back into the gap, and that would be your entry here in the gap, okay? And then we have the same thing over here. All right. So this is our consolidation range. All right. Price finally pushed up and broke and closed outside of the range. Now, this is also a gap where the market makers put so much money into the market to push this outside of that range, it created a hole in the market, right? This is also a gap. This is a gap. They act the exact same way, okay? You want to wait for price to come back to 50% and fill the gap. And in this case, price traded a little further. And over here, we didn't quite get a full 50%. So since this one didn't get hit, then you wait for price to get underneath this one, and it retested it a couple of times, and then it dropped, okay? Another. which is going to mess up my EU chart. All right, so this is some sideways consolidation, right? We're not getting any new highs and we're not getting any new lows. All right, we got our breakout here. You see that? Price finally closed outside of this range. Okay. Price never came back into this gap or this gap. Okay. So when it never comes back to your gaps near the range, then you just want to follow the gaps, right? So we have one here. Price never came back here. Here. Price never came back here. Here. All right, so price gave us a pullback, but it didn't touch our 50. And I'm sure if we go down to the smaller time frame, hold on, because I want to make sure I'm in the right spot. Okay, so I wanted to see if we came down to the smaller time frame, although this is just the hourly, if price was getting respected on these gaps, and this one has not been respected. All right, so the next area that I would see that actually got hit and respected is right here. Hey, Kenfred, did you have a question? All right. So when price doesn't come back to the range, a lot of the time, so this is the same thing that I would do with my fair value gaps, right? When price is of this range, then I'll come down to the 15-minute lower and trade that structure, okay? Because then you can get a better entry and you'll get gaps that are respecting price a little bit more, okay? So let's go back to that real quick and then see if we can go down to the 15-minute. Where's it at? Who TJR is? I see a lot of people asking about that. I'm not sure who that is at all. I tend to not stray from my strategy. So like when I first was learning how to trade, of course I was jumping around. But once I got to the point to where I started to understand the charts a little better, I don't try to dibble and dabble and learn anybody else's strategy. So I stick to ICT concepts with Romeo CRT zones. And the CRT zones was the only thing that I added onto ICT concepts. Okay, so let's find a closer range. What's your recommendations for a beginner? This is day 4 of our beginner course. We're going over the Candlestick Bible. Day 1 is on YouTube. Day 1 and 2, 3 has. Let's see if we can find a closer consolidation range, which is right here. Okay. All right, so we got our support and resistance area. Okay, and this is our displacement here, where price finally closed underneath our range and worked out perfectly, right? It left us a gap, and price came back to the gap. So sometimes trades work out. So sometimes it'll work like this, and sometimes it won't. And this is what we're currently looking at on EU. Since price looks like it's downtrending, right? Price left us another big gap. Looking for price to trade back to the gap. I'm freezing. It's not even telling me I'm freezing. I'm sorry, guys. TikTok Studio is horrible, and they deny my Streamlabs permission. So every day I'm going into Streamlabs and I'm appealing it. I don't know why they keep denying it. All right. So it says the best selling opportunities occur at the resistance level, okay, which is the resistance up here. And we only acknowledge support and resistance in consolidation areas, okay? And then the best buying opportunities is at resistance, okay? And this is also considered a break and retest, right? So price breakout and then retest it. This is Discord. Give you a gold signal. When we go over to the charts, we'll look at gold. All right, so when the market is ranging, no one knows what is going to happen. We don't know who's going to be in control of the market. This is why you have to pay attention to the boundaries. But when one of the players decide to take control of the market, we will see a breakout of the support and resistance levels. And the breakout means that the ranging period is over and the beginning of the new trend will take place. Yeah, we'll go over gold. All right, so this is just another example of your consolidation areas and then your breakout. And as you can see, even here on the example chart, the breakout gave us a fair value gap, okay? So I say at least 70% of the time, price comes back to that fair value gap of the area that it broke out of, okay? As you can see, the market trading between support and resistance levels, and suddenly the price broke out of the resistance level. This indicates that the beginning of a trend is likely to happen. So the best way to enter is after the breakout. It's important to remember that range boundaries are often overshot. Given the illusion a breakout is occurring, this can be very deceptive, and it does trap a lot of traders who position into the breakout. The third way to trade ranging markets is to wait for a pullback. So that's really the only way. The only way to trade is to wait for a pullback, okay? The pullback is another chance to join the trend for traders who didn't enter in the breakout. Can this strategy work? Yeah, it works all the time. Strategies work, it's people that don't because they want to rush the process. All right, so consolidation, breakout, pullback. You always only want to enter on a pullback, okay? Because you can sit here and watch this breakout and then like, okay, it's dropping, and then you finally enter here, right? Price drops a little bit, drops 49 pips, then next thing you know, draw down 40 something pips. And then you close it before price goes in your direction because you're wondering what's going on. So always wait on a pullback. And if it runs without you, it runs without you. Just wait. You'll get a pullback eventually, or you'll spot that price is changing direction, right? All right, so it's showing here the consolidation, the breakout, the pullback, okay? And then continuation. As you can see in the chart above, the market was ranging. Hold on, guys. Anyone can learn. I'm sorry, guys. Y'all have to bear with the freezing. It's TikTok Studio. All right, guys. So I'm selling CHF JPY. I had to come and check on this because my alert went off earlier, and we can go over my reason to sell when we finish this beginner's part. And bear with me. I'm trying to send the signals group this trade. All right. Okay, so it says, as you can see in the chart above, the market was ranging. Price breaks out of the resistance level to indicate the end of the ranging period and the beginning of a new trend. After the breakout, the market comes back to retest the resistance, get back in on the retest. It's still glitching. Wow. Yeah, TikTok Studio. Let me see if they gave me my permission back on TikTok. Nope. See, this is what I'm dealing with on Streamlabs. It's not giving me permission, and TikTok Studio is glitching horribly. Uh-oh. It's the studio is new. TikTok Studio is new. So it just keeps freezing. Do I use bot? Not sure what bot is. What is it? Do I take trades live? Yep. I just entered a CHF JPY sell. It stopped after it was new. I didn't say anything after that, but I just asked what is bot. Is that gonna help? Okay. I was trying to see if they knew something that was gonna help. Okay. And see, it's gonna be freezing like this. The replay on YouTube also because I just download this from TikTok. Before I could just stream on TikTok and YouTube and not have to worry about downloading because it just streams to it. But um, I prefer TikTok because no one's on YouTube. to indicate the end of the ranging period and the beginning of the new trend. After the breakout, the market comes back to retest the resistance level that becomes support before it goes up. The pullback is your second chance to join the buyers. I say the pullback is your first chance to join the buyers, okay? Always wait on that pullback in any market, okay? But pullbacks don't always occur after every breakout, which they don't. We saw that on another EU example, right? So if it doesn't occur, sit on your hands, okay? When it occurs, it represents a great opportunity with a good risk to reward ratio. Exactly. This is why we love a pullback, because we want a good risk to reward ratio. What you have to remember is that a ranging market moves horizontally between the support. How do I know it's just a pullback? Okay. All right. So you see over here where this was a false breakout. Price gave us a displacement candle. It gave us a really heavy bearish engulfing candle, right? Price closed outside of the range, and then it gave us some dojis, which is indecision, and then price moved back into the range. This is why you have to wait for candles to close, okay? So you have to wait for candles to close to know if price is actually going to break outside of the range or if price is going to trade back inside the range, okay? The PDF, I asked ChatGPT for it, but it's on Kohan.com. You can literally just Google the Candlestick Bible. And then I also dropped the link in the student server. Okay, so that's how you know when you have a pullback, right? Price will break outside of the range, and then it's going to pull back and retest your range, or it's going to pull back and retest the fair value gap. Okay, if it's not a pullback, right, then price wouldn't reject it and continue down. If you don't have a pullback, then price is going to trade back into the range. Okay, you wouldn't buy because price broke out of the range and the sellers took over. Okay, so you wouldn't buy. This is why I say beginners just stay away from consolidation. This is why I mark up several pairs, right? Because some pairs are consolidating and then some pairs are trending. So you want to trade a trending market. So this was consolidating. This was consolidating for 8 days. Now, yes, it was a 87 pip range, right? Consolidation is the ranging market. I said that earlier. When they said ranging, I said sometimes known as consolidation. Yeah. So the download's in the Discord. Um, I didn't get a chance to fix the Discord link today. So send me your email and I'll send you the Discord. Okay? So this is consolidation. This is a range of market. All right? So we wait for price to come outside of the consolidation and then we wait for price to retest it or give us a pullback, and then you'll trade in the direction that price gave you an impulsive move outside of the consolidation. No, I'm not forwarding the PDF. I will forward y'all the Discord link, and then the PDF is in the Discord link. All right, so this is consolidation. If you want the PDF, it's inside the student server, and I'll send you guys the link to that. And then I'll update it. I really can't see it. I'll update it tonight. The link on my link tree. So that don't try to trade the breakout. Okay? Trying to guess breakouts is the fastest way to blow an account. Okay? Because as you can see, price came outside right here. Then it came back in. Then it did it again. And then it came back in. So you never want to get caught in price coming back into a range and then your stop loss constantly gets hit because you're trying to predict a breakout. So let price break out, let price show you where it's going to go, and then wait for that pullback. When you are trading ranging markets, okay, ranging market is consolidation, and this is consolidation, sideways movement. Yes, this is breakout strategy. When you are trading ranging markets, always make sure that the market is worth trading. If you feel like you can't identify the boundaries, support, and resistance, this is a clear indication of a choppy market. Okay, I'm saying don't trade the ranging market. Leave it be, go to another pair. Okay, because this happened for a whole week. Okay, so leave it be. There's other pairs that aren't ranging. In Forex, choppy markets are those which have no clear directions. When you open your chart and you find a lot of noise, you can't even decide if the market is ranging or trending. You have to know that you are watching a choppy market. This type of market can make you feel and doubt your trading strategies as soon as it starts to drop in performance. Exactly. So this is why we just leave that market alone. The best way to determine if a market is choppy is just by zooming out on the daily chart and taking in the bigger picture. Okay. All right. So here's the bigger picture. But I wouldn't just say the daily, right? Because you can get a choppy market on any time frame, right? It can look like it's in an uptrend on the daily, right? But as you can see right here, if we go back down to the hourly, it's in consolidation. Okay. So zoom out on whatever time frame you're on. You don't mean offense for what? We're talking about the trending market and the ranging market. So we went over uptrends and downtrends, and now we're talking about consolidation and how price, when it's moving sideways, you want to wait for price to move outside of the consolidation range. Okay? Got it, Davies? All right. So we got 15 minutes left in our beginner hour. Okay. So this is also a choppy market. This is a picture of a chop. Okay. Leave it be. Leave it be and wait and let price give you an impulsive move. All right. So it says notice in the chart above, the price action in the highlighted area is very choppy and it is moving sideways in a very small, tight range. This is a sign of a choppy market that you should stay away from. If a market is choppy, in my opinion, it is not worth trading. If you try to trade it, you will give back your profits shortly after big winners because markets are often consolidated after making big moves. Nope, don't scalp it in a choppy market. You're better off scalping trending markets, right? And then you just scalp in the direction of the trend. Your trades will go so much smoother. Okay. All right, so that's the end of the trending ranges. So we're going to go back to the chart real quick and we'll start back on page 70 tomorrow. And I want y'all to tell me if it's trending or if it's choppy. So let's come over here to gold. All right, this area right here, are we trending or are we consolidating? This area right here, trending or consolidating? Uptrend, yes. All right, here, what are we doing? Range choppy, yes. And this is why I say don't scalp a choppy market, right? Because although this is a little bit of pips, right, especially on gold, it's something decent, but it's not going to be many a times where you get movements like this. A lot of times it's going to be like this, back and forth, back and forth. Then a sharp impulse up, sharp impulse down, back and forth, back and forth. And then you're just going to be sitting there praying that your TP gets hit, or you're going to be sitting there in profit, out of profit, in profit, out of profit. And then you're going to be like, okay, I hope it goes back in profit so that I can close it. It's just too much of a guesswork, right? When it's just easier to just trade a trending market. So just go to a different chart, go to a different pair. Okay. All right. And then here we have what? What's predictable? I don't retype that first word. Downtrend, yes. All right. What do you need in order to draw a valid trend line? So range is predictable. A range is consolidation. Okay. Trending markets are predictable, right? Because in trending markets, we know that it's making in a downtrend, it's making lower highs and lower lows, right? So you always want to wait for that low to get broken, which is a break of structure, and then you wait on your pullback and then you take it lower, right? Same with an uptrend. But in a range, so with a trend line, what do you need for a trend line to be valid? How do you know when it's too late for you to enter in an uptrend or a downtrend period? This is why you wait on your pullbacks, right? So here, gold is downtrending, right? We got our impulsive move, we got our correction, okay? And then price continued. Then we got another pullback, and then price continued. We didn't get a pullback into this area, right? But price continued. So now it looks like price is trying to form some type of consolidation, right? But also at the same time, it still gave us a valid pull. Okay. So you know when the trend is changing when you get a change of character. Okay. And a change of character is when price decides that it wants to break your structure areas. Am I still frozen? Okay. So how do you know when the trend is changing, right? You said, how do I know when it's too late in an uptrend? So right here, we have a downtrend on gold, right? Y'all see that? Price is making lower lows, lower highs, lower lows, lower highs, right? This is why I say you always want to wait on a pullback, right? So we can use this section right here because this was a perfect pullback. We have our impulse, and then we have our correction back to the 50%, and then price continued lower. So if price wanted to continue higher, okay, it's going to, this is our last, for this section right here, this is our last lower high, and then retest it and go higher, okay? Price is fractal, but at the same time, you're doing the same thing on every time frame. So if you're on the 4 hour, it would be the exact same thing as the 1 hour and the 15-minute. So I'm not going to go from the higher time frame and show you that on each time frame. Okay? You'll have to learn your structure points. All right? And that is the first assignment, is marking up structure, and we went over structure in another video. Okay? So, how do you know when price is changing trend? Okay, you'll have to find your structure points. Okay, so price is making lower highs and lower lows, which makes up our downtrend. Okay, in this instance right here, in this area, this was our lower high that took us to our lower low. Okay, so I marked off broken is price will break your last structure area. Okay, and then it will retest it and continue higher. Okay, and in an uptrend, it's going to do the same thing, but it'll break it and go lower. Okay, all right, so right here, let's find another clear. Should I go off in a sell when it's retesting it? So on my pullbacks, I always use my fair value gaps. Okay, when price comes to my fair value gaps, and we can use this area right here, I'll come down to the 15-minute or lower. Okay, all right, so now in order to know when to sell, so this is area, I want to find my next minor structure point. Okay, so this is our last area right here where price led up to our last high. So this would be my break of structure point on my minor structure. All right, so now I want to wait for price to break structure on my minor structure and leave me with a gap for my entry. Okay, and price didn't quite pull back to the 50%, but it gave me a bearish engulfing, letting me know that it wants to continue lower. All right, so CJ, we can come over to CJ. All right, so when I just told y'all that I was selling CJ, this is why I had my alert set. Okay, so I was waiting for price to come back underneath this fair value gap right here. Okay, and then I set my alert, and once my alert went off, then I came down to my lower time frame. All right, and I wanted to see a break of structure on my lower time frame. Okay, so this right here is technically our last high. So I see we have a pullback area here, but you see this area is higher than this area. Okay, So now I want to find my structure point that led me up to this high, okay? My structure point will be in a uptrend. It'll be the down candle, okay? So my down candles are pink, my up candles are black. It will be the down candle before the impulsive move that pushed up, okay? So this was my last structure leg, all right? So then I was waiting for price to break this structure, which it did. And then price came back up. It played around a little bit. Then it broke our structure again. And I like to wait for my fair value gap. Okay. So I got my fair value gap and my entry was here. I'm on the 5 minutes. So I can find my entry on indices. I like to go down to the 1 minute. I don't 1 minute or 3 minute. Currency pairs, you can do 15 minute, 5 minute, 3 minute, or 1 minute. Okay. So I'm going to delete this chart and then we're going to do a full walkthrough on this CJ play. Okay. All right. So I do ICT concepts with Romeo CRT zones. Okay. So I do top-down analysis. So I do start on my monthly. All right. And the CRT stands for candle range theory. And candle range theory is just the theory that every candle trades into the previous candle. Okay. So this would be the previous candle. And this is the following candle. And as you can see, price is trading back into this candle. This will be our previous candle. This is the following candle, right? So the ideal is price has to run a high or a low of the previous candle and then trade back into it. So I start on my monthly because I want to see if my monthly is near a monthly high or low, or if price has already ran a monthly high or low. Okay. So here on CJ, we are near a monthly high or low. It's 117 pips away, and JPY pairs typically move 80 to 100 pips a day. So 100 pips is realistic for JPY. So I will mark last month's high. Okay. And my month lows are red. Okay. You did. A lot of people are teaching on TikTok now. All right. So now we have our monthly marked up. Now, mainly for my currency pairs, I like to use my weekly range. So I'm going to come down to my weekly and I'm going to mark up last week. Okay. Because the gist is trying to trade into the previous candle. Okay. So I'm going to trade last week's, mark up last week's high, last week's low, is my rectangle box, and mark up last week's 50%. Okay. So this is my CRT range. All right. And what we want to see is, we're not on gold right now. What you want to see is price come outside of the range. Okay. And then come back in the range and show you a break of structure. And with that break of structure, you want to see price create a fair value gap, and then you wait for price to trade back into that gap. Okay, so price came outside of our range, and now I'm just going to come to my daily, and I just want to see if there's any trend lines or any other gaps near that I want to recognize. And here on my 4 hour, I see a trend line right here. Okay, so I am going to mark that. Yeah, trading view. Okay. And then I have here a price balance range. Okay. And a price balance range is a fair value gap and an inversion fair value gap right next to each other. So I am going to mark up this area here. All right, so when I see a price balance range, that's more than likely going to be my TP versus the 50%, and especially because they're so close to each. Why market? A price balance range is an imbalance in the market, just like a regular fair value gap. But in this case, we have two holes in the market. That's why it's called a price balance range, okay? So when you see a fair value gap and an inversion right next to each other, and an inversion fair value gap is just a regular fair value gap that price didn't quite respect, right? This is a bearish fair value gap, and what should have happened is price should have came back here and sold, but it didn't. Price brought through it, and then it never came back and retested it. Okay. No, it did not. So as you can see, it's open here, right? And it's open on this side, right? So price came through it, but it did not respect. All right. So now it becomes a price balance range because you have an inversion and a fair value gap. Both weren't respected right next to each other. Okay. Inversion fair value gap right here. And I have a video on fair value gaps and inversion fair value gaps on TikTok. My border, I put to 0%, and then I just highlight my middle line, and you can put it whatever color you want. I don't have my background checked, okay? All right. No, they weren't respected. They were created, right? But they weren't respected. So as you can see, price left us a gap here. So in order for it to be respected, price had to come back and trade into it 50%, which is the on the other side. Here, came back into it. If it would have been respected, then price would have traded lower. Okay, it didn't do that. Price traded through it. It never came back to retest it. Okay, if you look closer on these lines, it never touched it. This one, this part here and this part here never touched 50%. That's not being respected. So therefore, this is a price balance range. It has left a hole in the market. Okay? Got to be more careful. Y'all missed everything I just said. Okay. I'm saying that they weren't respected, right? So this was our first gap, right? Price traded below. Price came back, but it closed above. In order for this first gap to have been respected, price would have had to reject it, right? For it to be a valid fair value gap. And then for it to turn into an inversion fair value gap, price has to trade through it and retest it. Price never retested it. Okay, if you zoom in and look a little closer, price never came back and touched our 50%. This is what you call inducement, when price comes near it but doesn't touch it. Okay, Why does the market retest the fair value gaps? So I was just taught that this is where the market makers enter, which is why they leave so much of a gap, because they enter trillions of dollars to push price into the direction that they want it to go in, and it leaves these gaps. Okay. And price has to balance itself out. It just can't leave these gaps open. So price comes back and fills either 50% of the gap, or sometimes it fills 100% of the gap. Okay. So they come back. So this is where they leave their orders, and they'll come back and pick up their orders and then continue. Okay. We're definitely not talking about internal range liquidity to external range liquidity. That's too far advanced. Okay. All right. So back on our CRT range. So we got our, so people buy to sell again. So people buy to sell again. Yes. Buy to sell, sell to buy. Okay. So this is why you have to wait on these impulsive moves for price to show you where the direction is going. Okay. So this is why you wait on these impulsive moves, and then your retracement, and then continuation. Okay. So my retracement is always going to be to a gap. Okay. And that's why I'm expecting price to come back here. So buy, then go back for 50%. Why is it giving them so much profit? 50% to the FEG after they bought. I'm confused on that question. They're respected on all time frames. It's just if it's respected, right? So you're going to follow the same pattern for all time frames, right? You're either going to get three things when price comes to a gap. Trade through it and then reject it. That would be a respect, because this is a bullish fair value gap. Okay. Or price is going to come through it, retest it, and reject it. Okay. Or price is going to consolidate and then give you your impulsive move in your direction, and then come back and continue. Okay. Okay. So any fair value gap, you'll get those three aspects. This is CHFJPY. Okay. So even on the 1 minute, because I use fair value gaps on the 1 minute on NAS, right? It's just waiting for price to show you what it's going to do at those gaps. You're welcome. Okay. All right. So back to our CRT markup. So we added our trend line. Price came outside of the range, and we have our price balance range. But most of the time, you'll take TP at 50% of your weekly zone. Okay. Only reason why I'm taking it here is because I have this price balance range here, and it's near the 50%. It's only 27 pips. TP is take profit. Okay. We went over our mini dictionary on day 1. So when you get a chance, go back and watch that video. All right. So now I'm just going to come down to my 1 hour time frame. Okay. And now, as we can see closer on the 1 hour, price broke outside of the range. price came back into the range, okay? Technically, on our 1 hour time frame, we don't have a break of structure yet, okay? So our break of structure area would be here because this was our last pullback that led us to our last high. Good night. Okay, so this was our last pullback that led us to our last high. So this is technically our break of structure, which would align with our trend line. So we'll want to see price break structure, leave us a fair value gap somewhere in this area, and also retest our trend line. Okay, I entered early here at this fair value gap. Okay, so price came back into the range, and I wanted to see price come back underneath this fair value gap. And then this is why I came down to the lower time frame, and I wanted to see price break and retest our fair value gap. And this is where we got our break here, okay? And then price pulled back and retested it here, and now it looks like price is trying to test another gap, okay? But for the beginner and the safer trade is to wait for price to get underneath this trend line, because you don't want to see price do this, bounce off of this trend line and go higher. So I'm going to be watching this. I'm going to be up tonight. So if I get any type of rejection, I'm going to take some profits off of my trade, and then I'll just move my stop loss to entry, right? But as a beginner, you want to wait for price to break this trend line, break this last structure point, give you some type of gap near this trend line and this structure point, retest it, and then you can come lower to this balance range, okay? And that's still decent 100 and something pips on CJ, okay? This is in my way. If price breaks the last pull, how long does it take to reverse? You can't time reversals. You can't time them, right? I can say 15 minutes, but that wouldn't be accurate. I can say 30 minutes, but it wouldn't be accurate. It's following the candlesticks and following price action and allowing price to show you when it's going to reverse, right? So this is why I use my fair value gaps as zones, and it's called a POI, a point of interest, where you want to see price pull to, okay? And then you want price to show you at that area what it's going to do, okay? What research, what else did he ask? What other question did you ask, little bitch? Guys, let's be nice, because this is beginners. Everything is for beginners, okay? I think this is their second day. I know they're here the other day. And I don't mean to say they. I can't see on picture profile if you're a he or she. So I don't want to be rude. Oh, okay. Yeah. No, you don't have to know what TP is. Yep. That's why I went over it. Yep. So there's on day 1. Okay. I went over the mini trader dictionary, but TP is take profit. SL is stop loss. Okay. FVG is fair value gap. Yep. Master market structure. And that's all it is, right? So we can come off of GJ, and I can come over here and mark up EU, right? So we were talking about trending markets earlier today, right? So in our first beginner hour, does it always have to come back to the trend line below? Yep, I'm about to mark EU step by step. But let me answer B Glad's question. Let's go back. So does it always have to come back to the trend line is what you're asking? That was TikTok saying there's inactivity. See, TikTok Studio is crazy because literally I'm talking and y'all tapping in the chat. Could y'all tap? I don't know. Y'all been giving hearts. I don't know. It just does that sometimes. Be glad. Let me make sure I understand your question. And that was TikTok. Let me know that it was disconnected for a minute. Be glad. Let me make sure I understand your question. So, does price always have to come back to the trend line? Is that what you're asking? This is CHFJPY. So, does price always have to come back to the trend line? No, right? So if you're saying as far as like price coming underneath it and retesting it, does it always have to come back to the trend line? It doesn't, because sometimes price will just continue without you, right? But as a confirmation, I'm not going to enter it if it doesn't retest, okay? So there has to be rules that you have, and you have to stick to those rules. And if price decides that it just wants to come underneath and just continue down, right, then I'm just going to leave it, or I'm going to find another point of interest, which would be another fair value gap, which would be right here, right? So if price decides it doesn't want to retest and give us an entry up here, then I'll wait for price to come underneath here and then retest this gap and take it lower, okay? But there's always going to have to be a pullback for me to enter. You always want to enter on a pullback. So this is an impulse move, this is a pullback, retracement, and then continuation. You never want to enter on the impulse move because you don't know when the pullback is going to happen. And you don't want to get caught. Let's say you enter up here, right? And you're in profit for a few, and you're in profit for 40 pips, and then price pulls back for 60 pips. Okay? So you always want to wait on that pullback. So that way you're not stuck in a lot of drawdown. Okay? So this would be a break and retest. All right? So with these trend lines, I'd say I've noticed at least 70% of the time you're going to get a retest. And then sometimes it may even do this on this side, right? It may touch it, and touch it, right? And then give you another impulsive move, okay? It has to be a full body candle to pull back, or just a wick has to pass to sell. Does it have to be a full body candle? So does a full, are you asking if it has to be a full body candle for a pullback versus a wick? You understand the question, Davies? Full body candles confirm your market structure, then pull back to the fair value gap or order block. Yes. I still don't understand the question though. Does it have to be a full body candle to pass the pullback, or just the wick has to pass the sell? So are you talking about the break of the trend line, or are you talking about retracement? Did they answer your question? Break of the trend line. Okay. So with anything, like even with our fair value gap candles, right? You want to look for a candle that is called displacement, okay? And displacement candles look like this. It's a lot of price, it's a lot of money in this candle, okay? And we talked about candlesticks the other day. So make sure you go back and watch that video because learning the anatomy of a candlestick is important, okay? So a candle like this, right, versus a candle like this candle shows you that sellers have taken over, okay? This candle shows you indecision. So it's not necessarily letting you know if buyers or sellers are in the market. So you want to see these strong candles, okay? You want to see a breakaway from this trend line, okay? So you want price to come underneath and break away from the trend line. And then you want to see a retest and then break away again, okay? Versus seeing this, right? And you see this candle, price broke away, okay? Somewhere on the lower time frame, you can bet that there's a gap right here. Fairly, but we got our impulsive move up. Let's see if there's one in the 3-minute. Okay, so we got a gap down here, but price never came down here. Okay, but you notice the difference on where, even on this 3-minute, price is trading close to the trend line, right? It's not really going anywhere. And then we got our impulsive move up. Okay, price is letting you know that it's beginning to move away from the trend line. Okay, then it started to create fair value gaps for you. What time frames do I use to chart? All of them. We're about to do a top down on EU for you. So where would you enter to buy? So this is where we go back to candlestick patterns, right? This is a pin bar off of the trend line. This is where you will enter to buy after that candlestick close, okay? This is another pin bar, okay? Let's see, GJ gave a good break and retest a couple weeks ago. Let me find it. Actually, I think I got a picture of it. I thought I had a journal shot of it. Okay, so this would be an ideal break and retest, right? Although price didn't come back to 50% of this gap, okay? And then you'd want to see price come back to 50% of the gap for your entry. Now in this one, we didn't get 50%. Price just came back into the gap, but it also gave you a pin bar, okay? Signaling that price was ready to go higher, okay? But sometimes, let's see if we can find another one. This right here is one of those instances where you had a trend line break, right? And price never came back. Okay. So when it does that, yeah, the free one, I have to. So what happened was it expires every 7 days, and I didn't know that. I'm supposed to change it to the unlimited one. So when we get off of here, I'm gonna go back and change it to the unlimited one. But if you want access to the Discord, just send me an email and I'll send the link. Okay. Uh, all right. So this is an example of a breakout of a trend line to where you never really get a good pullback. Price finally did a little dip here, right? And on GJ, with the amount of pips that GJ runs, this still could have been a decent trade, right? Trading it back to that high. Okay. Let's see. Just DM me your email. I was trying to find another break and retest one. Okay. So here we have our 2 rejection points that we can draw a trend line on. Okay. Now we got our break away over here. This broke outside of it and gave us a fair value gap right on top, right? So it's not always going to look the same, right? But as long as price gives me a fair value gap, then I'm good, right? So price broke on top of this trend line. It left some wick rejection. It came back and consolidated sideways. And remember, we talked about the consolidation move. On this one, you could have entered earlier in the gap, okay? Or you could have waited for price to give you an impulsive move outside of the consolidation, right? So we have our consolidation here. We have our impulsive candle, which creates, okay? So I gave you 3 different examples of a trend line break and retest, okay? So does that settle the questions about the break and retest? Why is this so big? Why is this so big? Oh my gosh. I can't even see what's going on down there. Wow. This is crazy. One day I can see everything, one day I can't. I promise you TikTok Studio can count its days. Yep, the Discord is free. Somebody talk so I can get back on Streamlabs. Okay, we're talking about our ranging and our trending markets. So currently looking at this hourly time frame, let me know if y'all think this is ranging or trending. Is it shortening there? Okay, there we go. All right. So currently, this is where price is trading, and we are trending to the downside. Okay, because price is making lower lows and lower highs. All right. So I'm going to start on my monthly time frame. Okay. And I want to see if price is near a monthly low or a monthly high. All right. And currently price is trading inside of last month's candle. So we're pretty far from our monthly high and low. I'm going to zoom and I want to see if there's any trend lines that I can mark or any fair value gaps that's near price that I can mark, right? And if you have, so this is not a fair value gap, but this here is, right? But this is so far below price. It's 578 points. It's too far near current price, and current price is right here at these dotted lines, okay? EU averages on a daily, we can just come down to a daily candle and just measure a daily candle, okay? Averages about 180 points some days, and then on the smaller side, right, 50. So 50 to 200 points on a daily range, okay? And this is 500 pips away. So I'm not too much worried about this gap right now. My weekly, okay? And I'm going to mark up my weekly CRT range. And my weekly CRT range is last week's candle, okay? So this is this week, this is last week. So I'm going to mark up last week's high, last week's low, and 50% of last week's range. Okay? Hey, Kaya. All right. Now, after marking up that range, I noticed that I do have a fair value gap here. Yes, price has already traded through it, right? But once price trade through it, now I want to see if price is going to respect it as an inversion and come back and retest it. Okay, so I am going to mark this gap up. And my fair value gap lines are purple. All right, so as you can see, price is right near that fair value gap. And we'll get out of that. All right, and we'll use that more so on the lower time frame, okay? So now I'm going to come down to the daily. All right. And on the daily, we have another fair value gap. Okay. So I also want to mark this up just to see what price is showing me at this area. All right, so I don't see any other trend lines or anything else that I want to mark up. So now I'm going to come down to my 4-hour time frame, okay? This gives me my recent range that price is trading in, right? And then I also see a couple other gaps down here, okay? So price currently just came to this fair value gap, which gave us our push up, right? And then if price decides that it wants to come lower, we have another fair value gap for another take profit area, okay? All right, so these are our current ranges. Now, with the CRT range, which are our black lines, in order for it to be a valid CRT move, price has to come outside of the low or the high. And in this case, price came outside of our low. And then price will have to get back into the range and break our lower and TP at the 50%. Okay. Now, with price making a downtrend, right? Technically, what we want to see is price to come back into this fair value gap here and continue lower, okay? So price is currently near 50% and is currently retesting my CRT low, okay? So at this area, this is what I would call a POI, okay? A point of interest. So this is where I want to see, is price going to reject and come lower down into this other gap down here, which will give us a new lower low, right? That will make this point of T range, okay? And then come back and trade back into last week's candle. All right, so now I'll come down to the hourly time frame. And as you can see, it is Asia session, so sometimes, good night, sometimes price consolidates during Asia. More than often, price consolidates during Asia, right? So what happens with these sessions, your main sessions are Asia session, London session, and then London session, and yeah, just email to the DM. Okay. So what happens in your sessions is you'll either get an impulsive move, right? Price will continue to move in one session, and then price will consolidate in another session. So this was Tuesday, right? Price gave us this retracement back to this area, and now during Asia session, it's consolidating. EU is a London and USD, because Euro is a London pair. It keeps freezing. I'm sorry, guys. We got to bear with it. It's TikTok Studio. Okay? Until they allow me permission to get back on Streamlabs, I have to stick with this. All right? So let me go back. So typically what happens is in your sessions, you have Asia session, London session, and New York session. Okay? Those are your main 3 sessions. One session, you'll get an impulsive move, and then another session, you'll get consolidation, right? Because the market is either trending or ranging, and ranging is consolidation. So this was Tuesday, and we got a nice impulsive move, right? So now this was New York session, and now this is Asia session. The market is just moving sideways, okay? So Euro USD is a London and New York pair. That's when price moves the most on this pair. So London session starts 3 a.m. Eastern Standard Time. New York session opens at 9:30 a.m. Eastern Standard Time, okay? So a lot of the times during London, price will start to move the direction that it's going to be. So what I want to see from here now is another displacement move, right? Price is either going to drop heavily from this zone, okay? Or price is going to trade through it heavily, okay? So at the moment, I don't know if we're buying or selling, but if price is trending market, then it's going to sell. Okay? Thought it was just you. Oh, as far as the freezing, no, it's everybody. I'm sorry. There's nothing I can do about it. Okay? So if price is truly in a trending market, then it is going to sell, right? Because price is making lower lows, lower highs, lower lows, lower highs. Okay? And they're lower because this was our last low, and this low is lower than our last low, okay? This is our last high, and this high is lower than our last high, okay? So we can follow these structure points, okay? And this will be a full structure point right here. And this would be this trend, okay? So we're either looking for a CRT move where price is going to come back into our CRT range, and then we can take it to 50%. or we're looking for rejection off of our CRT low, taking us down to another low. Now we can look at the dollar, which is DXY, right? And the dollar has an opening gap. Okay, the dollar has an opening gap right here, right? So the dollar could pull back a little bit more before deciding if it wants to go higher or not. So if the dollar does pull back a little bit more, then that would make EU push up a little bit more, okay? So let's not get faked out by price coming back into our range. Price has to come back into our range, and then it has to break our 15-minute structure. And this high right here is your point that we would want to see broken. We would want to see this broken, and then we want to see price create some type of fair value gap that we can enter into, okay? So remember, we always enter on our pullbacks, and then you can take price to the 50%, okay? But we don't want to get faked out where price comes in, even if it does break structure, right? And then decides to pull down. This is why you have to wait on that retracement to see what's going to happen, okay? Okay, so UJ and then gold. Thanks for sharing the live. Thanks for liking the live, guys. UJ. All right. So UJ, I got out of this trade earlier. I got out right here. So I'm going to do another top down on UJ. And if you look at UJ right here in this area, this would be considered a ranging market, right? Because price hasn't given us a new high and price hasn't given us a new low, okay? Now, the most important thing that I'm looking for is if price has ran last month's high or low, and it hasn't. And then I'm looking for any trend lines, okay? So I see one here. All right. So now I'm going to come down to my weekly. All right. And I'm going to mark last week's CRT range, which is my high, my low, and 50% of the range. All right, and then I'm going to look for any other trend lines and any other fair value gaps. And I see a fair value gap right here. All right, so this is what we call inducement. Price came so close to 50% of this fair value gap, but it didn't touch it. So this lets me know that price wants to move back into this direction, right? It's just catching the move to continue this buy up, okay? So now I'm going to come down to the daily, and I want to see what the daily is telling me, okay? So the daily has started to make a little buy trend here, right? See that? So we had our low, right? And then we had our high, higher low, higher high, higher low, higher high, okay? Higher low, higher high. Now the daily is coming back into a fair value gap. See that gap? All right, so this gap is going to let me know if price is going to bounce from this area and come back and completely fill my 50%, or is price going to come underneath this area, retest it, and then come back into my CRT range and give me a CRT play, right? Now, normally on our CRT plays, 50% is our TP. But because we have a trend line here and a fair value gap here, I don't want to predict that price is going to break that area, okay? So more than likely, I would use this area here as my TP versus trying to predict that price is going to break it and hit here. Because as you see, when it comes to these trend lines, price will hit it, okay, and then bounce away. And you don't want to have entered up here, right? Price dropped, gave you all these pips, right? 200 pips trying to reach here, and then price turns around and comes back up here and hits this. Then you've got stopped out and lost all of your profits, okay? So this is why we trade gap to gap, right? Section to section, okay? So now we'll come down to the 4 hour. And this is where I had my TP at, right? So I noticed that price was pulling back. Price gave me this evening star, and then it created this gap. And I entered up here at 50% of this gap, all right? And I originally was taking it to 50% of this fair value gap, right? But I got out a little early. I don't like holding excuse me, holding through that swap period because they charge you swap fees and stuff like that. So I'd rather just get out and get back in. All right. So now we're just waiting, right? Price left a new week opening gap here, and a new week opening gap happens when price closes at one area on Friday, and then Sunday price gaps up, right? Because the market moves over the weekend, we just can't trade it, okay? And so this is what happened over the weekend. Price gapped up, and then price continued higher, okay? So this was our impulsive move. This is our correction, right? And we want to see where price is correcting to before we get in to continue the move, right? So if we come down and we look at this 4 hour, you can see the uptrend a little better, okay? So price is pushing up, pull back, up, pull back, up, pull back, up, and now we're waiting on our pullback so that we can continue. So it's just watching these gaps to see where we can enter to continue, right? So the time has already passed to enter the sell, right? Like I said, we got an evening star, which is a bullish candle, a doji, and a bearish candle. Price created a gap. It came back into the gap to let me know that price was failing to reach higher. And this is how I got in that sell, right? So now, even if price comes underneath here, okay? So this is 50% of our hourly. This is 50% of the 4 hour gap. If you want to trade it any lower, wait for price to come underneath the 4 hour gap because the hourly and the 4 hour is too close to each other, right? It could come underneath this hourly and then bounce off of the 4 hour and go higher. Okay. So wait for it to come underneath the 4 hour, retest it, and then the weekly CRT high will be your first area to watch for take profit. Okay, because if you range and fill the new week opening gap, then you'll also watch for 50% of this area, because this is another area that it can bounce off of. Because you always have to remember, in a trending market, you really don't want to trade the retracements unless you can get it at the top, okay? Because price can turn around and continue, right? Because it's trending, okay? So you never want to get caught in the retracement and trade and market the wrong direction. It's just better to find another pair, right? Find another pair, okay?